Hello, hello, hello. Let's get the microphone check out of the way here across the various streams. Let me know if you can hear me in the various streams, including the YouTube stream. If you can let me know over there if the audio is coming through okay. We're going to get started here in a little under 2 minutes. All right, let's get the music under control here, and we're going to get started shortly. So we'll bring that down. And we're going to roll right into the stream here in just a second. All right, let's do this. Hello and welcome to Market Madness here on Landy's Crypto Corner. We do this stream every Wednesday. We're going to take a look at Bitcoin, Dixie, gold, and traditional markets. We might even have some time for some requests later in the stream. We'll see how things go here. We are going to start out with the daily on Bitcoin today. And it looks as though Bitcoin is still trading below that upper first standard deviation, which has moved up to around 35,700 now. We did get our test of the wick high that we called out the other day, around $36,000. Now, if Bitcoin does trade back above this upper first at around 35,700, I would expect the most recent wick highs to get ran again at 36 to 36.2, where there is a weekly. Now, we can see that the basis band of the Bollinger Bands here is local. This is at 33,900. I want you to make note of that particular that particular level. 33,900 is very specific, and it is not just significant on the local time frames, but you'll see that on the lower term time frames, it is a volume-based area that we have picked out on our volume map. And it's the lows over here. So, basically the lows of this particular range at 34,000, 33.9, if that area is dropped, I would look for a run back to around 33.3 to 33.5 by this wick low that's coming in at 33.4. So splitting the difference there. Below there, I would look for a move to the close open at around $33,000. If we did see that area lost, I would be looking at the Bitcoin in 60 seconds chart here. We'll pull that up and we can see that there is untested daily support down here. Now this is historical daily support, and this is coming in at 32.4, and just below there I'd be looking for a retest of the daily, weekly, and monthly level at 31.8. Now of course this is the big breakdown level on the monthly that we've talked about, that also coincided with the breakdown on a close open structure for the daily and weekly as well. So big area. We had a first pass rejection there in early July, broke right on through there. That is a logical retest zone if we do see price start to lose the local range. Now, if Bitcoin does push up, I would be looking for that $37,000 area if Bitcoin can recover above 36.2 and reclaim this weekly overhead. If the bulls can push through there, I would look for a stair-step structure up to around that upper second standard deviation at 37.5 to the weekly just above it, 37.7. If we did see price trade above there, be aware of around $38,000 to the monthly above it at 38.5, and there is a weekly above there at $39,000 to $40,000. If we did see price push above there, I do think, it would be safe to start looking for a pullback if we didn't already see one before then. Now, if we do get a pullback in a wider fashion on the daily, 2-day, 3-day time frame, then I would be looking for an adjustment to those upside targets whenever we see a low put in. But from where things currently stand, if Bitcoin does push on through these weeklies here, specifically 36.2 to 37.7, this is all fair game at the monthly at 38.5 to $39,000 to $40,000. Above there, I would exercise caution, at least in the lower term timeframes. Now, this particular structure for Bitcoin is beginning to paint, the bearish divergences. Now, this bearish divergence in RSI is not actionable. So I'm seeing a lot of look at the bearish divergence. Well, it's not actionable until we see a high that then breaks the consolidation lows. So there's nothing actionable at this particular moment. In fact, I'd argue that this is pretty strong price action until we see something like a low lost at around $34,000 or the basis at 33.9. So that narrative is kind of, needs to be benched for right now until we see those downside areas close below. And if we don't see that, we got to keep looking for this to keep trying higher and stepping up, at least within the local range. And if it does break out, that's where we get our deeper targets. Now, if we do see 34, 33.9 dropped, that's where, we will see bearish divergence develop and be actionable. You will not see it show up on many charts though, because we're not seeing a local high being set for RSI in terms of the close open structure, and it would only be set on this lower level. It's not going to populate in many cases. Some indicators it will, some it won't. This is the advanced RSI by Caretaker, I believe, from app.crowntrading.net. I have no affiliation with them. I don't have any kind of sponsorship deal or anything. I just really like the developers that Crown has assembled over there. So in this case, until we see something actionable, it's kind of a big nothing burger. Now, we can see RSI is painting a little bit of a downside picture as it is, but can still remain strong, and it's the same look on Stoke here. I'd be looking for bullish resets on Stoke momentum if we do see any closures back above 35,540, 35,600. Now, Bitcoin is currently trading under there, but that doesn't mean that it's not going to push to those areas in the meantime, especially if we see closures above the upper first again around that 35,700. I would look for a little bit of a bullish reset on Stoke momentum on the daily to then start looking a little bit higher, at least at a local range high retest, maybe a little bit higher to that weekly at 36.2 to 3. Above there, if we start seeing closures, especially on any longer term timeframes above the daily, like a 2-day, 3-day, 4-day, 5-day, then it's fair game for Bitcoin to keep testing higher. As it stands right now, just kind of hanging out, consolidating on the highs. That is not a bad thing. Can it turn into a bad thing? Well, you start seeing that bearish divergence actually be actionable below around 34,000, 33.9. Then we can start entertaining some further downside, in particular right into this daily area at 32.4. You may have noticed that the lower first standard deviation is now nearly above that 32.4 level. And it is above the prior wick highs of this long form consolidation down there. So that does mean that if price heads that way, it's more than likely going to be bullish. Now, if it did fall through the 31.8 level, there is two weeklies down here. These are weekly closes that occurred during that consolidation on the highs there at 30,600 to 30,300. And hey, what do you know? Those are weeklies that happen to coincide with the current daily lower second standard deviation. We have this cool down on BBWP, or volatility of the bands here, as measured by BBWP. Free indicator, again, another caretaker special. This is lining up to possibly get re-expansion. Now, Bitcoin really isn't going to be looking for re-expansion until we see closures above that upper first. And in particular, you want to see closures above wherever the upper second is. Now, the upper second is currently at 37,500. I do suspect if Bitcoin is going to continue to go sideways here, we will see bands quickly contracting on price action. That's where you get a quick pinch of the bands. Wherever price then starts to trade, if it's strong, it trades above the upper standard deviations and then gets nice re-expansion. Now, the same goes for the other side. It can very quickly pinch. If it loses the basis and starts to break down below the lower standard deviations of the Bollinger Bands, then we're looking for further downside price action. So don't mistake the current band position for what's going to be relevant at close today, but it is something to watch and keep in mind as the bands and the standard deviations of away from the basis there, which is the 20 simple, are going to be a good indication of where they land versus support and resistance of direction in terms of volatility as well. So I would have it on your chart. It's a free indicator. You can just go and look at the link in the description. You'll see the Landy bands with trend check there. Landy bands, medium-term time frames or levels. This is going to be integrated pretty soon. I did run into some bugs with it when I was integrating it, so I might need some help from the developer who helped build this. He actually built this independently as a bit of a problem-solving exercise for looking at lower term timeframes and remembering where the Bollinger Bands were on the higher term timeframes, because you can get lower term timeframe expansion to the downside. For instance, we see very, very, very tight compression here on the 4-hour bands. Now, yes, they're sideways and up, but if we saw downside expansion on the 4-hour, we could just see expansion right into that daily basis, which would still be bullish. Especially if it ran out all of its momentum there and started to reverse off the lower second and third area around that ever important basis band on the daily. So keep that in mind. I will hopefully have that integrated very, very soon here. We'll see. Now the daily, of course, is going to be the most relevant thing that I'm going to be talking about later today in the Bitcoin in 60 seconds video. But we did previously see a 2-day closure, and now we have another one coming up with this Wednesday candle. So the basis band of the daily is right below the upper first standard deviation of the Bollinger Bands on the 2-day here. So this is pretty important as it is lining up with some local areas on the lower term timeframes at 34,200 to 300. The upside of the bands here, the upper second standard deviation, is coming in around 37.7, right at that weekly, right around the upper second of the daily, which is slightly above there, to be fair. You can see that the upper third is just really reaching up there to the sky at around 41,200. If we did start to see like a really big move to the upside, because the bands are so expanded on the 2-day, I would be looking for anything above that upper second into that upper second and upper third area as being a likely short-term high. And if we did see things break down, of course, we got the daily basis there at 33.9, the upper first there, kind of bracketing that ever important zone around where things could break down if it did start closing down there. But you can see the lower first is at 32,100 on the daily, and coming right in between there and the lower second of the daily, which is at 30,300, that big weekly level that we looked at, we have the 2-day basis band now. And that's coming in at 30,800. I do suspect that's going to move closer to 31 to 31.5, maybe even 31.8, as we do see that this is moving up very aggressively now on the 2-day chart. Bollinger Bands with percentile, or the BBWP volatility metric, is still pretty high, but we are seeing it underneath the moving average. So that does mean any spikes right from where price action is right now are likely to be short-term lived, meaning spikes to the upside, unless we saw consistent closures that then turn BBWP and the moving average back to the upside. So, if we do see another move up, I do think that's going to be kind of it for a little while before longer form consolidation, maybe some mean reversion, if we do not get it before then. So this is only if Bitcoin were to spike up, let's say to the upper second on the 2-day chart, we would likely see BBWP pick back up, but it's not going to be very likely that it turns the moving average, might get over the moving average, but it would be very unlikely from the current posture of the bands and the spread on them, in terms of the deviations, that we would see that as a long-term move. Now, if we did see compression in this area, and then re-expansion, so we see some compression of the bands to re-expansion, then it's a more sustainable move. But if we were to see a spike from here, likely going to be a logical area of resistance, obviously around some big levels, and lead to further consolidation and mean reversion. So, just be on the lookout for that. We do have that 2-day closing with the daily. We also have the 3-day closing with today's daily. We can see the upper second standard deviation is just above price action at 36,500. The upper first is below the daily basis band, and this is coming in at around $33,000. And of course, that is the close open that I referenced on the daily. That's this close open from October 23rd to the 24th there, Monday, Tuesday, close open up over there. So keep that area in mind if we do see price start to break down. That would also confirm that one drive, or one real big drive, of bearish divergence on the current daily move. Not seeing the same outlook here on the longer term time frames. We can see that BBWP is still above the moving average, so expansion is still very heavy on the 3-day chart here. And note that the basis band is coming into the lower second standard deviation of the daily. So that would be the 20 simple on the 3-day, starting to creep up into that $30,000 level. It is currently at 29.425. If it's going to close today, it's likely going to be around 30,300 to 600 or so. And that would not surprise me if it ended up in that key area. Let's see what momentum is looking like on the 3-day. 34,900 rather. It's not 39. That would be great. It's 34,900 on the 3-day for the momentum pivot. Now the 2-day is also up on closures above 35,100. So, Bitcoin's getting very close to the end of this move. Maybe another spike to the upside, maybe a daily bullish reset on momentum, and then we come back to it later. The 4-day is going to be closing with today's candle as well. So we've got the trifecta on the lower term time frames between the weekly and daily here, between the 2-day, 3-day, and 4-day. Do we have a 5-day? No, that's going to be tomorrow or the next day. Oh no, that's not till it's not till the end of the week, coming into the weekend. So we have the trifecta of the 2-day, 3-day, 4-day closing with today's daily. Big closures. We've got $33,000 on the 4-day. You can see that Bitcoin closing anywhere above the upper second standard deviation, around 35,550 or so. It's like right on the upper second right now, so it is moving. I would give it a little room, around 35,600, and we will see continued expansion to the upside here on the 4-day chart. Beautiful. Love to see it. Now, we can see that if Bitcoin fails to close above there, and it's going to expand again, so it's going to probably be somewhere around the top side, maybe in the deeper $36,000 to $37,000 area, as we do have 75 over 61 for volatility right now, which does mean that we are continuing to see expansion. Although, to be fair, it has slowed down as it consolidates on the highs. It's likely to catch up a little bit as well, that moving average there, which does mean that the upper second is going to be fairly close to the highs here. It is a 4-day, it is on log scale. So the main thing to be looking for there would be somewhere around, the key areas that we've talked about to the upside, 36,200 to 37,700, 38K or so. And the momentum pivot being there at 33, that big daily, of course, I'll point it out again, that close open from late October. So, below there, we're going in for a retest of the breakout. And if it's bearish or reclaimed, just so you know, from these longer term time frames, as long as it's closing above this last close open at 26,800 to the wick low there at 26,500, it's still higher low territory, looks fine. In fact, from a 4-day chart perspective, you can argue that 29 7 to around $30,000 at the daily lower second is a good support zone to be looking at. If we did see 31.8 fail again, that would be a reclaim of the wick highs over here. So you'd hear a lot of chirping from people who have been bearish for a very long time, but I think they would just get wrecked again, to be quite honest. And as we go into the 5-day, I'll show you why. We can see that the upper first standard deviation on the 5-day is here at 32,000, 32,000 to 32,300, 400 area, that big daily area, just above the 31.8 breakout level. Now, that's where the lower first standard deviation on the daily is, upper first on the 5-day, and we have the basis below there on the 5-day. Would be expansion down to somewhere around, $29,000 or so. Again, basis well above the prior lows. Now, what you want to see is, Bitcoin get maybe a little bit more continuation if you want to see the setup on the other side. So when things do get mean reversion, whether it's on a wick or a close, doesn't really matter. But you want to see it keep stretching out that upper second standard deviation, which Bitcoin on the 5-day is right up against right now. 35.5 or so. Closures above there keeps the BBWP nice and up. Of course, it's at 69 over 47. Nice, always with the meme numbers. But if we did see the upper first and basis lost, you do not want to see the basis lost, I should say, because the lower first standard deviation of the Bollinger Bands has not yet begun to curl back up, and it is below the prior low. So we want to see higher lows on any kind of pullbacks, but no matter where the pullbacks come, whether it's from higher or right here, you want to see it maintain above that 5-day basis is really what I'm trying to say here, and that's around 28.8. I believe that was like a torque number for the prior consolidation structure before Bitcoin kind of pushed a little bit higher, but it's still a valid structural number to be looking at. Just at the time, the timing was maybe a little bit early to call for that number, but that would be something to watch for if we did see 31.8 break down, and of course those weeklies at 30,600 to 300. You want to see 5-day start to curl that lower first standard deviation to the upside, and or just get continuation above that upper second at 35.5. Big area there. 5-day is in the overbought zone for momentum. The pivot is at 31,151. Nothing too crazy. We're still seeing that expansion to the upside, of course, as referenced. The meme number there for expansion right now is currently sitting at 69, over 47 down here at the moving average. So this does indicate that even on pullbacks, if they were immediate from here, unless we see big closures that are breaking down from other structure, this is looking just fine. And I just shut off my monitor by accident over there. All right. Let's look at the weekly. Yep. Weekly, it's trading above the upper second standard deviation. This is still very, very strong expansion on the weekly. And, it's up around the 50% range as my voice cracks. Again, maybe I'll grow a little bit more. Maybe those days are behind me. But the moving average here is still all the way down there at 23%. So, I can't argue with the weekly. It's closing. If it closes, especially anywhere above $35,000, which is the upper second standard deviation on the weekly, I'm looking for this to keep pushing higher. You can see that nearly all of the daily Bollinger Bands standard deviations are in the strong half of the weekly Bollinger Bands. This is about as bullish as you can get. I mean, even more bullish would be all of the standard deviations. We're only missing the lower third, and quite honestly, the lower second from a daily perspective, would probably push down into the weekly basis, which again is coming in at around $29,000 to $30,000. Need to see that area hold up. On the weekly, we still have that lower first, just like the 5 days below the prior wick low at 26.5. Need to see that start to curl up. Bitcoin closing anywhere in the strong half of the bands likely sees that still continue sideways and down a little bit as the bands expand. But week over week, if we start to see that curling back up above this prior low on the weekly, which was a higher low, then I'd be looking for continuation to the upside into those upside targets that we've talked about many, many times in the Bitcoin in 60 seconds videos and here on the live streams. So weekly remaining strong above around 29,800 or so. So still lots of momentum left to go here as Bitcoin's trading, above 35 especially. So did we referenced this on Monday? We had the 2-week close. That's fine. 3-week. What do we have? We don't have anything else. So just really the weekly, and then we've got the trifecta of the 2-day, 3-day, 4-day closures coming in. Again, 35,100 for the 2-day on the momentum pivot, 34,900 on the 3-day, and the 4-day is there at 33,000. So this is all pressure to the upside, anywhere above $35,000. And just keep an eye on the daily, because we might see a momentum shift with a bit of re-expansion of the Bollinger Bands here. You're already starting to see the etchings of that. If Bitcoin can close kind of where it is and higher, then we'd be looking basically to that upper first to kick off re-expansion of the Bollinger Bands, maybe a quick residual pinch of the Bollinger Bands and then re-expansion, especially if we get a close over close where Bitcoin gets above the moving average here, and then the moving average turns as well. Otherwise, we could just see a spike up into those upper standard deviations and then rejection, continue to consolidate, that kind of thing. So keep a close eye on it. So just to reiterate, because I do know that sometimes this can be a difficult concept to understand, if BBWP is going to continue up, you do want to see the moving average curl up with it. So we could close with a cross, but you want to see the subsequent closures then continue to turn that moving average to the upside. The only way that this is going to happen mathematically is if Bitcoin can close above the upper first standard deviation and remain above there. That would be on a close over close basis. If it just crosses to the upside for volatility and then crosses right back down, we're going to just see contraction of the Bollinger Bands, and we have to wait further. Means the consolidation probably continues. Yes, it can still consolidate up and to the right, meaning that it can even start to break the highs and just put in slightly higher highs and still be in a consolidation structure as we see cool down of the Bollinger Bands. I will tell you though, if we do start to see it crack the local highs again at 36,000 and it regains that weekly at 36.2 up there, the way the 2-day is looking with the Bollinger Bands, so that would be, cracking these highs, getting above this weekly here. That's where the 2-day, you definitely need to pay attention because residual expansion has it in those key areas right around the next weekly above 36.2 at 37.7 to 38K or so. And if Bitcoin were to keep pushing, especially close over close, this 2-day closure coming in tonight, if we see it start to recover above this weekly at 36.2, you're going to see that upper second standard deviation continue to swoop to the upside while we're getting cool down of BBWP. This is still, that would be very bullish, right? Anywhere above this upper first is still going to be bullish. And that is, right there at 34.3, 34.4 on the 2-day chart. So we would see residual expansion of the Bollinger Bands to the upside. And really what's happening when you see this BBWP cool down is the moving average is catching up to price action as it consolidates and slows sideways. And the lower standard deviations are curling up. So you're getting, a chase. So the lower standard deviations are chasing the basis, not expanding away from it any longer. So this is actually a stupidly bullish look. And it's the same thing that we were talking about on the downside moves in the heavy bear periods, 2022 into 2023. So, mean reversion closer to being on top of these ever important supports and retest them, prior resistance and then retest as support is really what you want to see. And you do want to see, very strong price action would be, for the bulls would be, you'd want to see this 36.2 recover and then keep grinding up against that upper second on the 2-day. And that's likely going to get it around that monthly up there, possibly the weekly above at that 38.5 at the monthly and 39.40K on the weekly there. All right. I think I made that pretty clear. I will actually take a look at the various chats to see if there's any questions this time, because I don't want them to sit until the end of the stream after I'm, done with looking at Dixie, gold, and traditional markets. So let me go ahead and poke around the chats here and answer any questions if there's any. Okay, yeah, so that's more of like a testing question for FINRA. I can always help you answer that a little later on. Oh, okay, never mind. Okay, so you did want, that's for later reference. Okay, cool. Let me look over here. Hello, no name, Bobby, Cheryl, Don. How you guys doing? And gals. BBWP should rise when RSI goes up also. No, it's not attached to RSI at all. Not RSI is completely different. If you want to measure RSI, you get a Stoke RSI that measures the velocity of RSI. When you're talking about BBWP is the volatility metrics of the Bollinger Bands. It literally reads, the code for this is publicly available. I asked for permission to use this, but it's publicly available. But basically, why is this not loading? That's weird. Anyway, like I integrated it into the Landy bands here. It uses the Bollinger Bands standard deviations calculation, which I'm going to be getting into eventually with you guys. I'm going to be talking very, very detailed about, in deep detail, I should say, about the Bollinger Band calculation, how it's calculated in terms of the math behind it, which you don't really need to know. I mean, it's done for you, but how standard deviations are calculated away from the moving average in this case, how it used to be done by hand, and then how it's been, updated and upgraded to work with, modern charting software and automatic calculations and drawing on the screen here for you. But in this case, BBWP is the volatility metric of the Bollinger Bands themselves. So, you close above the upper. The further you close away from the basis, the more you're going to see volatility continue to rise. Now, when the basis starts to catch up like it is now, you're going to see volatility fall. So here on the daily, we have a 26/23 because volatility, we had the basis catching up much faster here, right, when it was on the lows here. But now we're seeing price pull away from that basis towards the upper first again. So you're seeing volatility tick up a slight bit more. Now, this is where, Caretaker works a lot with Eric Crown over at Crown's Crypto Cave. And one of the things that, I know he's big on a new set of indicators that he's got there. But one of the things that I've always tried to stress, and I've mentioned to him a few times, that The volatility can be measured. It's not, it's direction neutral, yes, but understanding that BBWP and the way that it interacts with Bollinger Bands, he doesn't put Bollinger Bands on his chart. He's just reading it as the volatility metric and from a statistical point of view. But I found that you can actually really refine and up that hit rate for the statistics when taking volatility into play. If you understand that above the basis you're in the strong half and you begin to see expansion, it's upside expansion. And then what happens when it's cooling down? Yes, you're in mean reversion, but technically, because it is based off the Bollinger Bands basis, the sideways consolidations, you have the basis catching up. It's a cool down. It's more bullish as long as it's staying above the basis. Then it's bearish if we start seeing it below the basis and expanding to the downside, of course, below the lower first and second standard deviations. Also, above the upper first and lower first standard deviations, you will see volatility continue to pick up. Why? Because it's pulling further away from the basis band, right? So it's literally all based on this basis band. So when volatility is increasing, it just really means that price is pulling away from that basis band in one direction or the other. When you start seeing closures above the upper first, that's a good indication of expansion in that said direction, meaning closures above the upper first means that at minimum, the next candle is likely to continue in that direction. Same for the lower first. At minimum, you expect the next candle to at least continue in that direction. Now, that does not mean that it's continuation on a close. It could just continue on a wick to test current wick lows or lower, or current wick highs and higher. So that's the expectation. It doesn't always happen because these standard deviations often act as support and resistance areas as well. Now, when you see closures above upper second standard deviations and lower second standard deviations, they act as one of two things. So they either act as reversals or continuation. When you see a low volatility environment like a consolidation, they're more likely to act as a continuation event. So closures above, aggressive expansion coming off of a contraction. So understanding that you're in a contractive phase down here, when you start seeing expansion at initial rejection there, once we got closures above it, we're getting expansion. Once we see expansion, we're likely to see expansion in the direction of that closure. Yes, you can see initial rejections around there. That's quite often what we do see at the upper second standard deviations, right? But in this case, like we saw back here in early October, but it comes down and holds the lower first. Nice support area, didn't pass the prior low. Comes back up, starts to get the etchings of expansion here. Closure above starts to get expansion. And then we get a little mean reversion back to the upper first standard deviation, and then a nice strong candle above that upper second to really kick off expansion. This was, oh, well, it's going to reject at this high at $30,000. It's like, well, we're going to continue to see expansion past that high now because we have a nice strong closure above it. So now we're looking for continuation to that wick high and higher, and the current wick high and higher. And you saw that in the next three candles. And then we had another, as price expanded the Bollinger Bands, we saw it used as a lift off on the bottom there. As it went sideways, the upper second was closed above twice there, kicking off aggressive expansion to the upside. Then we saw it lose it as the bands themselves expanded past price basically on a close. And then we saw that basically used as a platform for liftoff and continued expansion to the upside in an aggressive manner. When you see very expanded bands, though, often you will see the upper second and lower second standard deviations act as reversal areas. They can sometimes act as continuation, right? You're not always going to get these really tight pinches and consolidations. But in most cases, like back here, you can see that we had expansion to the upside off the lows, the prior lows at that 24,750, 24,8 area. We had nice aggressive upside expansion, right? Closure above the upper second standard deviation. It moves up and starts to consolidate in the next few candles, testing the highs. We get more closures above, test the highs and higher, consolidate some more. After that upside expansion, we get a nice, very quick, tight pinch on the Bollinger Bands. We come back to the upper second, run the highs, fail to break it on a close, and then it's to the downside. We saw support coming in during the consolidation at the lower second, some attempts for the upper first and second area, but got rejected around there, including right there on this doji prior to the dump off. We saw it try for the upper second and upper first and close below. Stuck the landing on the basis band there, but then lost it in the very next candle and then started to get expansion because the Bollinger Bands were so tight. We saw expansion to the downside below the lower second. So it was aggressive expansion. Boom, down. We get our little mini dump there. Nice reaccumulation consolidation on higher lows. Regaining the lower, holding that lower second standard deviation. You see the retest of the lows. That's where what I'm going to, what I'm expecting to see on the highs is a retest of the upper second. Doesn't mean that that this couldn't have re-expanded to the downside. It could have, but the criteria wasn't met. It didn't close below the lower second and break the wick lows. It did break it on a close rather, but it didn't close below the lower second, which was the secondary criteria there for expansion to the downside. It tried for the upside, bounced around, found the lower first as support, got a little bit of expansion, found the lower first as support, got expansion again, found the upper first, and then expanded aggressively. So understanding that volatility right now is in a cool down because we are contracting. The Bollinger Bands, the upper second and third are starting to curl down towards price action. Basis is catching up. Lower standard deviations are catching up. But now Bitcoin is beginning to push that upper first again. And we can see that reflected in BBWP. Unless we see this confirmed, meaning close over close, we see closures above that upper first that then turn BBWP and the moving average back to the upside, then I'd look for re-expansion back to the upper second. And any closures above the upper second is where I would be looking for aggressive re-expansion to some of those deeper targets. I hope that helps clear some of that up. It's a good refresher for those that have not heard that spiel in a while, but also trade this way. So yes, that answers multiple questions. Good question there from Cheryl. As there's a whole bunch of people that actually work in the markets who are like, yeah, I needed that. Thank you. You're welcome, guys. And I hope that that made sense, Cheryl. So, but if you ever do want to measure the velocity of RSI, you can always turn on an indicator like so. You can go Stoke RSI. Or you can just horribly misspell it. Because I'm not actually sitting at my keyboard. I'm sitting on the other side. So you can just turn on like a Stoke RSI. You can see that Stoke RSI is saying, hey, we're down in the oversold zone. We're looking to head back up. And when you look at, this is just the velocity of RSI. And if you look at RSI locally, you can see that it did, it's within a range, right? And it is, kind of just consolidating lower lows, lower highs, but its velocity to the downside, it was very volatile to the upside. So quick move up, and then it curled back down and has basically bullishly reset on that. I don't really like Stoke RSI. I feel like it gives people the bias that this would go way further than it's going to go. And that's why I prefer a regular RSI, because it measures close over close price action, not the velocity of RSI. Because in this case, unless this RSI breaks above this last high here, so let's go ahead and see what that high is. 87.72, so it would need to close an 88 on RSI up there. Let's move the bullish control zone, bull critical level to an 88. And let's take a look at what price would need to be achieved on a close for this to avoid a bearish divergence. That would be 39,614, so 40K would do it. And if we start seeing that, I think it's getting pretty critical around that region. We talked about that prior, 39 to 40K, where the weekly is just above the monthly at 38.5. So, that's kind of the next big area. should we see price heading to that upside and getting re-expansion. So let's go ahead and take a look at Dixie, gold, and traditional markets here. If there is no other questions. You guys have questions over there, but okay, yeah, those are, yeah, that's all testing based questions. You guys are just getting them in for later. Okay, cool. That would be, yeah, that's not going to be publicly streamed because that's all FINRA gobbledygook for Series 24 and 57 that most people are not going to understand. There might be some people, but not in the typical YouTube audience. So we'll bench that one and come back to it later as I head over to Dixie. All right, Dixie is doing Dixie things. It did almost hit our downside area that we were looking for at that 104.69. Of course, all the meme numbers. We are still seeing this in a bearish posture anywhere below the basis here at 106.16. I'd argue that you'd probably want to see it rejecting right where it rejected at 106. And today remain below the lower first, run that lower second around 105 again, and start getting expansion possibly. Yeah, it looks like it's just really the etchings of expansion right now. There's no bullish divergence to be had on the other side of this. So we're seeing it's not really the etchings. This is basically what it's been doing since its initial move off the lows where it had very aggressive expansion to the downside. We've just been seeing it kind of, tap on that lower second, lower first, and ride the basis as the primary support on the way up. And now we're looking for the same thing on the way down. And, below 104.69, we're looking for, 104.5, 104, and then 103.50. I think that's going to be the really important area to watch out for the downside, as there might be significant bounces there. 106.64 to turn Stoke back to the upside on the daily. That's not looking likely today, but you never know. Powell is speaking or spoke or said something, and no one really cares. And the big thing is the lower second on the 2-day still in a nice bullish posture, even down to, quite frankly, the 104.5 region at the lower third. If it was going to do that, though, we would see expansion to the downside. I think this chops around a little bit more from the daily perspective, and we await confirmation of this turning on something like a 2-day, 3-day time frame. We did see the 2-day close down here, but it closed back above the lower first and currently trading right around that lower first at 105.50. So if it does close the next 2-day above the lower first, I would start looking at this as trying to set a low and then looking back to the 2-day basis and daily basis somewhere in the low 106 region. Above there, we're looking at the deeper 106.5 to 107 region again at the upper first area. Maybe, into that upper second where the 107's coming in. I would still say it's not guaranteed that it would break out above there as things have shifted into a more bearish posturing. 2-day is still down below 106.41. We're not seeing volatility really get lift off. We are seeing, basically this is a return to the mean when looking at this high structure over here. So nearly tapped on it. Hasn't gotten quite there yet. It tapped on this lower high from the move down back in March of this year. So this could potentially bullish your reset. So just be aware of that. That would spell some pain in the markets as liquidity kind of gets sucked up by the dollar. It really does point to more cash heavy allocation. So this is also the basis of the 3-day here, which is this just opened. So to the upside, upper first is at 106.5, 106.46. Above there, it can still play back to the highs at the upper second, 107, 107 and a half and higher. And if it does lose the basis at 105.50, then we start looking at our supports down here. 104.69, almost right there where the lower first is at that 104 and a half. Below there, where are we looking? Where the lower second's coming in. And that's right there at 103.50, 103.60 area. So keep that in mind. It is still heavy pressure down on any closures below 106.61, but as noted, if it starts pushing the upper first at 106 and a half, it could very easily turn that momentum pivot or basically get above that momentum pivot, start turning momentum back to the upside while setting a higher low on the 3-day chart. So in terms of swing lows, it wouldn't be a higher low, but in terms of closing lows, it would still be a higher low in my opinion. That's the way I'd read that. 4-day hasn't even met the basis down there at 104.68, almost a meme number. 106.74 is the momentum pivot. There is a 4-day, potential trend line regression, meaning that this thing could drop really hard and still maintain bullish long-term structure. We're talking 4-day. It takes a long time. I mean, this thing could drop all the way down to the 102, 103 area, and from a structural point of view, still be in a bullish position. Now, for the longer-term time frames, that wouldn't look very good for Dixie. We're talking longer term, like monthly, quarterly. Now, the 5-day, which should line up with the weekly, let's make sure. It's a little bit different look on expansion because of the different closing times, but actually, is it? No, it's not. It's exactly the same. Basis is there at 104.14. Below there, we're looking at 105, 103.50 rather. To the upside, you can see the upper first is right there by the daily basis band on the 5-day and weekly. So we can just look at the 5-day. It's the same as the weekly chart. And that's at 106.09 here to that daily at 106.16. So we could see tests in and around there to the daily upper first around those highs at 106.5 and maybe even slightly above to run the highs. But if we do see the 5-day close below the upper first, it's very likely that the basis is going to get hit. It's more than likely also going to move up into this 104.69, 104 and a half area, as it's currently trading around it's currently sitting around the lower 104 region right now. I strongly feel as though that is going to be hit. That target will be fulfilled at some point here soon. If not, well, I've been wrong before. 106.61 is the 5-day momentum pivot. And because it is falling, it's going to keep getting closer to price action. So keep that in mind. We could very, very easily see a bullish reset on Dixie around these pretty major support areas. So Dixie's indecisive. We'll revisit in detail as we see these closures come in over the next few weeks and coming into the end of the month, because the December candle is going to be very, very important for Dixie. We got to be able to gauge whether or not that's going to be bearish or bullish going forward into the December monthly and quarterly close coming into next year here. Let's go ahead and look at gold. Gold has pulled back to some of the key levels that we talked about. It has currently in the lower term timeframes lost the ever important 1953 level that we were talking about for a very long time. It's around these highs over here. 1953, it's 1952.95, but who's really counting? It can still come down and be very bullish above this close here. And there is 3 closes kind of consecutively in this same generalized zone. We got a close here at 1942. We got another close at 1942. And then we have a close open just below there, about $10 at 1933.32 area. Now, this area is going to be very, very, very important. It is the lower first. And if it does drop these 3 highs over here, so these 3 big zones, this high this high and this high. Then we're looking at the order block zone getting tested. So that's right around 1932 and on the open down to all the way down to 1908 on the wick. I would take that on a close open basis initially at around 1932 to 1920. And you can see that at 1932, we have the daily lower first standard deviation. Don't want to see Dixie. This is gold. This is no longer Dixie. 1932 close below. That would start to paint the picture that this order block wick low 1908 is going to get tested by the lower second. And if it does break down from there, which from this particular posture, I would not, that's not the first thing I'd be looking for. The lower second is actually in a strong position, but I would be looking down to the 1900 even area. And, quite frankly, that's a big move. I mean, this thing moved, basically $200 off the most recent low and then another $100 down. So it's like a 50% retrace at that point. So, and because I brought that up, we are going to pull a fib and just note that that is 1910 is the split the difference there on the fib. To split the difference there on the fib. Is this log? Am I in log mode? Let's go ahead and turn on log mode. And you'll see the number remains the same on linear. Move to log, and it's actually right there at the wick low. So just to kind of zoom in here, the 50% of this move is this wick low area from this order block candle that I've been calling out. You can also see that the 618 is lining up in general with that lower first standard deviation. So bulls want to hold that area. Otherwise, even though it is in an important area at the lower second, you don't really want to see that area dropped. So 1908, 1910, you need to see hold at worst. Otherwise, it's going to go retest the lows. Do I think it's going to make a higher low? Probably, at least from the daily perspective. We will revisit this on the longer term time frames like the weekly on Friday's live stream. Now, if it does trade back above the basis here at 1964, I would start looking for it to go retest around 1970 to 1982, 1980 to 1985 realistically. And then above there, 1990 to the upper first at around 1996. And of course, above the upper first again at any point. And I do believe it's going to run the local highs to around that 2010 to 15 area. And then above there, 2015 and 2030. As the numbers kind of get bigger, the stronger the move up there. So very, very nice on gold in terms of both the upside move and the return to the mean here. Let's go ahead and take a look at traditional markets, see how they're doing. Pretty dang good here. We did see a close open. Oh man, closed right on the wick there, huh? Funny stuff. So the close we saw a gap up open and a higher high. So it's not only did we get the trend break here, we got higher high. We're looking for higher lows if it doesn't just get continuation to the upper second here at around 34,500 or so. It's got some work to do if it is going to do that. It did reclaim this wick low. If it can consolidate above 34,000 to the upper first here at 33,900, go figure. It's like all in the same areas as Bitcoin too. In terms of numbers, I would be looking for a gap fill if it does drop that to around 33.8, and then back down to the basis somewhere around 33.5, 33,450 area. If it does get aggressive downside, as long as it's above the 33,000 area at the lower first, looks fine. If it is going to trade up from here, next big area I would be looking for is around 34.3 to 34,350. Above there, then I would look for around 34.4 to 34.5. So by the upper second on the daily. looking still pretty good as well on the Stoke here. 33,251 for the momentum pivot on the daily. Looks good in terms of structure right now. We just have to see how it responds over Wednesdays into Thursdays. Usually not the best days for price action, and we often see reversals there as well. We had a higher high close on NASDAQ, and I think we were back here on Monday, pushing that upper first, found that as support, and then swung the local highs here. So we saw, it did gap up open. So what was the wick high there? 15,333. We had two wick highs come in above there, 335 and 343. So, the door is open. A reclaim of this low here on that Monday candle kind of kicked that off to go run this high. The next big area would be getting closures above this low. And then not only do I think 15,300 on a close is what I would be looking for, which is trading around right now, then I would be looking for not only this most recent high to get ran at 53,333, but I'd be looking for 15,4 to 5. Now, if it does drop 15,1 to 15,000, I'd be looking for a deeper mean reversion. We do have a bit of an order block over here, but for the most recent relevant price action, I'd be looking back to somewhere around, upper 14,000 to 15,000. Below there, back to the basis around this area here at 14,800. And then just below there, maybe a gap fill down to 14,650 to 700. I would want to see higher lows come in above this last spike high, though, which is around the basis, and that's at 14.8. Momentum's probably still good. Yep, 14,618. That is going to aggressively update. But yeah, it's still pressure up. Looks fine for right now. We'll come back to it again on the weeklies on Friday. Coming into close, let's look at SPY. SPY took out the high, huh? Not on the close, though. So the open high here was at 436.95, and this close came in at 436.93. It did swing it, though, to be fair. And it is still above the upper first standard deviation. Now, in this case, same kind of deal as the others. If we do start seeing, specifically 433 breakdown, then we're looking down to like 430 to the basis at 425, 426 or so. Below there, we're looking back to 420. If it is going to get continuation, it does need to, it's got to remain above this 435 wick low, in my opinion. Above there, it's got a chance. It ran the 438 to ran 438, which is exactly what we're looking at. Next area would be 440 to 445, and that would be a reclaim of this low over here and a push to that upper second standard deviation to really get it into that zone. If it reclaims this wick here at 444, which means a closure above 445, then it's fair game to go start looking at those 450 regions. So we got our bases covered. As long as it's above 420, it's looking fine. And even if it, retraced quite a bit, dumped out back to 420, still a really good higher low posture for, price action in that area. If it did drop it, though, it's right back to the lows, 409, possibly lower at 400. So that's going to do it for the bulk of today's analysis. Only spent about an hour and answered a few questions there, so that seems pretty good. I probably missed stuff that I wanted to talk about. But yeah, let's go actually look at the volume-based chart, because I told you to pay attention to 33 900, 34K. That's a big important area. Let's turn off the landing bands for a moment. We can keep the levels for the daily here. And we'll go ahead and turn on the volume map that we've created. A few things to note here. This area at, let's get volume on here as well. This was the volume-based wick high and the highest volume wick high that has created this range at the highs. Okay, so keep that in mind as we scroll back to take a look. Let's go ahead and look at that 35,157. That is this wick high here. So that wick high, as you can see here from the volume area, is this. Well, now that we've scrolled over, that's this volume zone between this guy and this guy here. So highest volume highs, these two. And that's going to be at, guess where? $35,000 on the actual wick high to 35,157. That's what Bitcoin is currently using as support. You're probably going to say, hey, wait, there's volume over here and the volume over here. These came in between levels. Okay, we were mapping continuation, and these came in between that levels, meaning that it was available, the temporary lines we put on here for those lows at the time. But the only reason that we're using this chart is to track continuation and support and resistance. The ability for price to retrace from a volume-based level all the way back to 31,750 here at this next wick high was in play, quite honestly. Now, we saw volume come in, and it regained the close open structure there at 33,900. Oh, hey, that's a big area that we talked about when looking at the basis band on the daily. And that is the actual close open. So remember, yellow is the close open. White is the wicks from these map. If you've been following along as we've been creating the volume map for continuation and mean reversion, you would know that the close open, which is going to be the close open from the move up to the wick highs, was a big, big area. It was a $1,000 area, a little bit over $1,000, 33,985 to 35 and 35,157. So about an $1,100 area between the close and the wicks. And then we saw consolidation between the close and the wicks. Yes, we saw it dip below a little bit, which would have been another very big drop down. But in this case, we saw a breakout to the upside as price consolidated and held this $1,000 zone. It moved above, got some nice closures and wicks that it put on this move up to 36,000. And then we have our local temporary lows that we marked that are high volume for the in-between levels that we marked in teal. Prior to breaking back above $34,000, we were marking these lows temporary because we're gauging continuation. And now what we're seeing is Bitcoin is using the highest volume wick high area as support after initially rejecting that area. Yes, this is high volume, but it pales in comparison to the volume put up on the way here. So in this case, it's all local range volume. It's for the local range, it's high. In this case, we're using the two highest volume candles as support to push back up and continue to test the actual highs of this particular move. Now, if we do see it break above 35,750, guess what? That would be above the upper first on the daily, and I'd be looking for the highs to get ran at 36 to 36.2. Now, if we do see the downside start to break down, particularly even below $35,000, then I would be looking for the local structure that we already have mapped here on a temporary basis to hold up. And if it does not, line in the sand for the bulls is going to be $34,000 to $33,900 by the basis. So, did tell you to remember $33,900, and that's why. So let's go ahead and turn on the DGen chart. I will look at the various chats here to see if we have any pertinent questions or comments. I see that some of you guys over there at the shop have turned into full DGens here on some of the FX pairs. Very nice. Yeah, I don't really talk about Forex pairs or currency pairs in these streams with like the public streams. There's some people ask me about it, yeah, but I usually have no opinion unless specifically asked by somebody that's actively trading them. So let's go to, we got the old DGen 30-second chart on here. Let's turn the music back up. And I will have to find the music player because I don't know where the heck that went. Let's go ahead and get that rolling again. Cover for some of the gaps of silence here while I read. Let's look. Bobby says, can I show you a very beautiful chart? Not kidding, not at all. I think the not kidding, not at all might be defying the whole beautiful chart aspect that you're going for there, buddy. Let's go ahead and see where you would have put that. You may message it to me if you like. Are you talking about Ordi? Which, yeah. Well, that was this morning, so probably not that one. You're more than welcome to show me a beautiful chart. While doing so, I'm going to turn on the sentiment range from Chart Prime, as this is actually a pretty neat little tool that does need to be tuned. This was a suggestion by one of the guys. Where'd you get this one from? Well, if you're aware of Chart Prime, yeah, they make good indicators, yeah. But where did you get this? Where did you specifically pick this one up? You saw it in another YouTube video. Okay. Very nice. If this is just messing around, I wouldn't be using this to trade off of, but it's the sentiment range MA from Chart Prime, and it's running the 4-hour. And in this case, the settings that you told me to set it to were very good. Did you also get those from that YouTube video? Yeah. Do you remember who was using it? I was asked to check this out. So length is a 40, source close, smoothing 5, ATR is 200, 10 times range multiplier, which is, I think, is that giving us the faded out cloud. Yeah. And then time frame is 4 hour. What did you say? Only it seems very good on the 4 hour, not so great on anything higher than a daily. Okay. So when looking at the 4 hour, I mean, what do I observe about it? Well, yeah, you told me all three of these, the SAR, the medium term time frame. This is just order blocks, by the way. That's all this is. This is just order blocks. We already do that. But if you like order blocks, that's all that is. MTF SND. I don't even know what this is, but I added it to the chart on your suggestion. Was this an entire trading strategy? I see. The SAR is not anything new. SAR is a volatility based indicator that tells you to go long and short. I prefer bands, but I mean, in general, this MA tells you when things are generally consolidating and bearish and bullish. It's definitely not a great timer of, it's basically telling you that this is bullish, go long. It's not a great timer of any of these things, so you do need some of these other, I'm assuming the SAR is what they're using as, yeah, I'm assuming they're using SAR as the actual indicator as to whether or not. My bet is they're using SAR here for mean reversion plays. And if it's green, it's generally, you generally shouldn't take the mean reversion as it's more likely to fail, but they're probably using, like when it's green, take the SAR signal to the top side. And basically the way SAR works, by the way, if you're not familiar, is the SAR will, when you see the red dots break, like here, it got broken on this candle, then it flips bullish, right? You know, and then on the other side, this is neutral. This is probably like either you're going to play the range for whatever this strategy is, or maybe just sit it out, because the SAR is getting you into bad positions here on the upside. Yeah, this is almost, if you're going to use this as some sort of strategy, this is a mess. You'd want to just either range play it and support and resistance, or Bollinger Band levels. You can see when it turned bullish here, it flipped the SAR and then flipped, yeah, that actually wasn't a bad SAR signal there off the low. Broke here. Basically told you to go long here. As long as it's stuck above the low and you're using proper risk management, you could play that range to the upside. Started to flip this guy here as it traded sideways, but then flipped it back and then ripped. Yeah, these numbers, by the way, on the SAR are just the low, the prior low. That's all they are. They're not entry signals. It's just telling you. It's a volatility metric, basically. It's a different type of volatility metric. Its closest analogous is going to be like break above the upper first, second. It's telling you this is expanding to the upside, right? Your bands are going to get you in a much better position, much quicker, and tell you to get out far before. So, I mean, in general, this line is, you know, you could look at it as like a bullish bearish line. It's not anything to trade off of, though. Thanks for pointing it out, though, or bringing this to my attention. As for this is just, there's a million of these. This is just a order block, you know, range. You know, it's pulling the rejections and the lows, basically, and then giving you zones. Like this 3 candle low, and it's just saying, like, hey, here's where the low is put in. That's an area, you could think of it as demand and, you know, supply. And you know, you should see volume match that, right? So in this case, we could turn off the bands. And if you're using supply and demand stuff, like we have this big doji here, but because it neither set a major, it was in between a consolidation where it closed. Yes, it was a big doji. Yes, it ran the wick highs, and everybody got bearish, but until it, you know, unless it closed below the low over here at, you know, 34K, it was a big nothing burger, right? And then the move to the upside actually put in a real swing high. So the swing high is just, you know, the wick high to wick low of the candle that then was closed below. Once that got closed below, that was your swing high. So your 3 candle structure, you know, and then we don't have any in-between blocks there. Bitcoin making a nice push here for the upside, by the way. Looks very good. But yeah, there's a million of these. I don't even remember which one, which one that was that you sent over, but yeah. I mean, I can look at the strategy if you want to find the video that you got it from. But realistically, I mean, you got to understand how each and every, if you're going to implement any strategy, like it was just interesting. Yeah, I get it. It's just an interesting strategy. There's no wrong strategies unless you're losing money, right? Like, but one of the things that you should understand is you should understand every single indicator that you are using within that suite, or within that strategy. So, you know, I'm familiar with Chart Prime, right? I'm familiar with their developers even, right? And I believe some of Crown's developers have crossed over to Chart Prime now. But, and Chart Prime is really just a brand that they all coalesce under, and some developers have indicators there and other places. So, but, you know, they output free indicators and paid indicators and stuff like that. But you got to really understand what the purpose of that indicator is and how it's meant to be used, and maybe even a little bit of the underlying aspects of TA that it's using, right? I mean, you should know the TA that it's using and why, and then how it's meant to be used in relation to whatever it's measuring. Then, you know, once you understand every aspect of a particular strategy, then you can back test it. And that's really what you need to do. You need to back test it. I've back tested Bollinger Bands and, you know, volatility and momentum, and, you know, mixed with support and resistance for freaking 20 years. More than 20 years. Oh God. So, you know, I've got a solid strategy that I've been using for a long enough period of time that, you know, the little modifications that I make to it are only in like, okay, move from Bollinger Band percent and width over to BBWP, because it's just such a fantastic tool, and it solved a big problem. But, you know, the other way was, you know, just using two indicators to solve the same problem, basically, where you can combine it into one, plus it's got the advantage of understanding, and it does shift your understanding too, because you have to understand how BBWP is different than Bollinger Band percentage and width. Yeah. Let me look over into the YouTubes and see if we got any. Bobby says Kuji USDT on Maxi. Okay. I think I've seen Kuji around quite a bit. Oh boy, that's a nice uptrend. High volume high so far, but as long as it can push above that wick. What's that wick at? 284. It's looking like it's gonna keep continuing even at 100%. Just might just redline this a bit more like it did back here. Let's look at the daily. Well, that's an upside breakout if I ever saw one. That's, can't hate it. Can't hate whatever the hell this thing is. It launched in September of 2022, so it went right into a reaccumulation. This is a breakout. Looks legit so far. I wouldn't be surprised if it got back tested though. It's 259, 260 is the momentum pivot. It's only just now redlining BBWP, so it's got time to keep pushing higher. I suspect 2 days up there. Yeah, nice bullish reset. Nice riding that upper first. Look at that pinch. Look at that fucking pinch. Excuse me. I should not be swearing. There's children around somewhere. Not here. Probably not on the stream, but they're somewhere. Yeah, I mean, this was a nice expansion up, right? And then come back down and run these lows while hitting the lower second. Nice reversal on the bands here, by the way. This is pretty. Okay, so the 2 days really pretty because, you know, it's getting an expansion and walking that lower second standard deviation down. It's breaking this low, but then it's got this slew of lows over here, it runs it in a really aggressive manner, right? And runs it right into this freaking right into this high that was this was the high before a structure break. So we had the big downtrend here, lower lows, didn't pass that giant wick low because it's a shit coin. So it's got, you know, huge spikes here and there on the lows, but we had the nice pop up on the 2-day here, and then a higher low set on back in April. That was nice. And then it expanded up, held the bases, held the lower first. Nice. Then expanded past this high, came back down, got into a bit of a downtrend, obviously, from June until September. And yeah, I mean, this was lower lows, lower highs, but it just ran the breakout area, because this was the trend break. This was the prior downtrend break. This is beautiful. Prior downtrend break is that high. Poked at it perfectly, because we know that MEXC actually, you know, they're a totally legit exchange that doesn't fix their books or trade against any of the traders on them, and then harass the shit out of me for months and months and months to do a deal with them to push all of my subs over to them, which, you know, because they're totally a legit exchange, they're going to keep harassing me via various shill accounts, and then promise me 70% of the maker fees and taker fees, which is bullshit. That's a legit ass breakout too. I will say, you know, you're getting really high volume here, but part of that's, you know, people exiting and then more people piling on that are probably just going to push this thing higher. It's probably going to earth itself pretty soon. So you know, it's just a matter of how far is it going to go. I mean, yeah, it's going to come back to earth. 238, but it's got room, so it can spend some time on the highs. Weekly looks good still. Nice nice accumulation, excuse me, sorry for coughing in your ears. Nice accumulation to break out, but this thing's going to come back to earth soon. It's just, you know, it's got the chops to keep going in terms of volatility expansion. So, and I suspect that it'll chop around the highs and then earth itself. Whether or not it, you know, I mean, the weekly's fine as long as it's back above this. The weekly's fine as long as it's trading. It's good for continuation as long as it's above 98 cents. It's well above there, right? So this was the real breakout. I mean, you could take the wick high, 109. I mean, shit, it's above this. It's looking fantastic above $1.75, which is $1 above there. $1.95 on a bearish reclaim. Looks fine. It's gonna get continuation. We're just seeing expansion on the weekly. This is likely to last for a little while. Probably big volatility on the lower term time frames than the weekly, but I mean, the weekly chart's pretty clean. Upper, second, and third expansion, 3 candle structure, come back, run the lower, second, and third, and then boom, up. Yeah, they're I'm sure MEXC is not trading with or against any of these traders right now. I bet you there was a lot of shorts on the lows that they just blew out. Those dudes cook the books. They B-book hard, so don't fucking use them. My research told me, and this is for those of you that pop in and out that are MEXC reps, like, you might be getting paid for all the people you onboard as partners, but they ain't paying you enough. Because if you're trading, you're losing money, which is why you need to keep trying to get small accounts like mine to shill your exchange when you know they're B-booking. Like, and if you don't know what that means, you need to go check it out. I mean, there's lots of exchanges, and none of them, you know, they're all a little shady. But I can tell you right now that MEXC is B-booking that shit. they are trading against everyone there. That was just in my own research, and then going on and looking for myself and experiencing some of those big order block pushes. So that ain't just a few whales. That's the exchange itself. So don't bother contacting me again, basically. Yeah, I don't know where else this trades, but I could tell you that they're B-booking over there. They didn't even know. I think they had to go look it up when I asked them, their reps. What's a B-book? Is that a Ninja Turtle villain? Is that like Bebop and Rocksteady? No. Soul has been looking good. I had somebody message me the other day. Soul is the soul of the market. I'm like, oh god. SOUL. I was like, yeah. Did we hit our areas? Not yet. Still messing around the highs. We almost hit that 48. What a beautiful swing of 38.99, huh? Nice higher low. And it's looking to push back to the highs. Maybe even higher. This is a nice move. This is what I mean by bands chasing and cooling down at the same time, just like we saw with Dixie. So you'll still see fairly high volatility, but it'll start dropping like a rock because the basis will be basically right up on this parabolic structure. But by the way, this is a parabola. This is a classic parabola. You know, whether or not this is going to be the one that brings everything to new highs, I doubt, but it's a daily parabola. Looks really nice. Nice sweep. Nice round bottom to impulse. Yeah, it's probably going to retrace pretty soon. You know, back to the mean. It's just a matter of where does that happen from. Looks like it wants to continue to test higher. At least its local highs around, you know, around the 46 to 48 level. Above there, I'm looking $50 to 55. At least short term, and then longer term, you know, we've got 75 up there. So if it does want to rocket ship itself up there, that's kind of the primary zone above price action. Looks good though. Above 41.60. I'm sorry, I can only see meme numbers now. 41.46.9. Then I'd be looking at this crossing back to the upside, just trading at 43.11. Got to see that close like that though. Weekly 29.91, so $30. Looks good. Yeah, excuse me. I'll get a little yawn in there. I need to get some food in my belly here shortly. Looks good though. You know, so the break from the actual lows is legit, but I still got work to do. Above, like I said, above $48.50. We're looking at $75 to $80 on Sol. Nice little recovery of the open over here for Coinbase. By the way, if it can hold that around $40, looks good. Looks good. Well, the big thing is the time change. Everything's earlier now for me, so getting a little tired. Getting a little tuckered out. Landy over here. So let's go ahead and go degen chart again for a few minutes here, and let me read this other chat over here. Ooh, big 30-second volume spike up there. Swing fail around this prior high. Oh, it's the McDonald's pattern. It's going to zero. Anyway. Yeah. So, my philosophy behind the treasury market right now is the philosophy, my personal philosophy behind the treasury market. If you want to know what Landy's doing, I've been rolling 1 month and 3 month auctions, right, until maturity. And now I'm in a bit of a transitionary point where I'm kind of sidelined. I'm parked. Like, I was parking Dixie just like everybody else, right? Because if rates do start to kick up, we're going to see significantly higher rates, but probably on the longer end of the curve, right? So your longer your longer yield dates, right? But the thing is when you buy those at higher prices, everybody's like, oh, I'm never going to hold this till maturity. No, you're not. You're going to trade it when rates are down for the yield, right? So you're going to trade it back. You're going to arb that yield because people are going to want the higher yield note on the longer bonds, right? And that note will be traded now until, expiration, basically. It's very rare that you're going to see like a day trader hold on to a 30-year note, right? Or T-bill. In this case, it's rates can go one of two ways, like I said before. So you're gonna break back to the highs on the 2-year, right? So like we talked about this on Monday, but the big thing would be if it breaks back to the highs, it's likely to leg up significantly higher, right? And then we're probably looking at maintaining a pretty deep inversion. As the market chases that shorter term yield. Yeah. But you'll see the long end of the curve start to equal out over time. Probably got, probably going to start seeing a transitionary phase. If I had to, you want my personal thoughts, if I had to, like, end of first quarter 24 into second quarter, we start seeing a real transitionary phase. If it starts to happen before then, well, I'll update my thoughts on it, but how do I think it would affect Bitcoin? Right now, Bitcoin's doing its own damn thing. Yeah. Bitcoin's on its own mission. Just watch the Bitcoin chart. That's all you got to worry about. That's my advice for right now on that. Yeah. Now, if you want to talk deep, like option strategy plays that use treasuries as backing, we got to take that one offline. That's a big conversation, not for a stream like this. Yeah. Cool. Yeah, I'll follow up with you. Yeah, just make note of what you want to ask and what your general ideas and thoughts are around what it is that you're asking, so that I kind of have some context as to where you are in terms of your understanding. Yeah. Cheryl says the McD pattern. Well, we've got a McDonald's to a winner to I want McDonald's but with a winner in between. Or you could say it used to be McDonald's and Wiener Schnitzel. It's just M's and W's, man. M for market maker, W for market wanker. Don't worry, once it breaks the highs, it's gonna Z out of here, man. Z you later. So, yeah. There's people who get that joke. Yes. The market maker. Yeah, there's guys laughing right now over there. I know that. Yeah, the market maker. It's literally a licensing exam to become a market maker. There is no the market maker. Yeah, I know. I know. That perception was built upon by people who don't or do. I should say they do understand the markets, but they're more into marketing their idea than actually helping you understand anything about what a market maker does. There's thousands and thousands and thousands of market makers. Yep. Cheryl's over here making me hungry. Although I'm not really a McDonald's. Can you be a market taker? Well, you can. I mean, sure. Got taker and maker fees. That's literally what that is. But if you want to become a market maker, you absolutely can. Get your first set of FINRA exams, your basics out of the way, and then start studying for your 24, Series 24. I would also, I mean, if you're going to do the 24, you might as well also do the 57. They're so close. But there's a few others that you'd want to throw in there as well. But yeah. And, prop shops are hiring financial trading firms. Could you go there's a lot of, well, you can trade some accounts for like ARCA and and CME. You could trade some of those accounts remotely, but you probably would need to move to the wonderful Windy City. Doesn't mean you have to, but I know guys that work, there's plenty of guys that work as subsidiaries and subsidiary shops, and then also just work remotely from like the West Coast here as well. But if you're going to trade, and you really want to get into it, you want to go trade on the floor, get that experience in. No, you learn how to not do that. You learn how to not do that. I think if there's no other questions outside of the ones that I know are hyper specific to deeper option strategies, hedged option strategies over there that you're cooking up, then I think we're going to call that a day. Call that a stream. Call that a Market Madness stream. And I want to thank you all for hanging out with me today. We had like a really inspirational song playing there at the end for a moment. And let me set this up real quick here. What time do we want this to turn off? We'll give it till 12:20. So we'll do 12:20. A little less than 2 hour stream today, actually. That's good. Got through some of the other stuff pretty early. And we will keep the DGen chart on here. And again, thanks for hanging out. If you're not subscribed to the YouTube channel, go ahead and subscribe. You can chat. It's free, obviously, to subscribe. I'm not talking about the new subscribe button that they have. I don't have any paid materials. I don't shill any exchanges. I just give you all the alpha based on my experience in markets. And I can, if you ever have questions, anybody has questions about just about anything when it comes to technical analysis, markets and how they work, I can pretty much answer most all of it. Doesn't mean that you're going to like my answer, and or if I don't know the answer, I can always typically find an answer for you, or at least find an analogous to what it is that you have a question about. And in this case, I would also encourage you, because I do see that there's people that are coming over from Twitch. The channel for YouTube is going to be at Landys, LANDYSCC, or you can just search YouTube for Landys Crypto Corner. And I do oh, Sam is here. Did I say hi to Sam? I saw Sam pop in. So got No Name, Bobby, Cheryl, Don, Sam. Yeah, there's a few others that I haven't seen in a while over there, at least in the chat, but I have seen them pop into the stream. But yeah, you can find me over there. You can also find me on x.com, formerly Twitter. You can find me at CryptoLandy, so CryptoLandy, and I typically do a Bitcoin in 60 seconds, typically every day after close. It can be a little inconsistent depending on, like, I may not need to keep repeating the same levels over and over again. That gets a little tiring for everyone involved. So during consolidations, you might not see as many updates. Just refer to the most recent one under the Shorts tab. And then, of course, there is a live stream every Monday, Wednesday, and Friday. It's going to be around 10:30 Pacific Standard Time, 6:30 UTC. So that's going to be the typical times. I will, of course, let you guys know if those times are going to change, as I do have other things that I do outside of this. Now, with that cough out of the way, I will wish you a very good morning, afternoon, and evening, no matter where you're in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, Landy out.